Okay, yeah. Hello viewers. Welcome to another broadcast, another update on the market. Today being 20th September 2020, we're on Monday. Uh, 1 week since our last broadcast, last week Monday. So last week Monday, I talked about uh, the potential of we heading into another period of extended period of consolidation, and I said that I should hope to come back a couple of days later and tell you otherwise, that maybe the market has decided to bounce, show us a clear direction, which in which case I would still not be wrong, because I said the consolidation was in a period that would no one knew exactly how long that was going to take. It could end that day, it could end in a couple of days time, or weeks, or months. No one knows exactly, only God Almighty knows. And I'm here to give you an update to as regards that. So far, yes, the market is still in consolidation, and we're 13 days old into that consolidation. So tomorrow makes it exactly 2 weeks consolidation. So we're currently still the territory I marked out. I was looking at the 42k territory as the downside of that consolidation, and the upside as at then seemed to be around 47k plus. So the markets tried to rally back up via a break and close back on the 14th, 1 week into the consolidation, above the 46.2k that seemed to be the swing low that's been that the market has been battling around since the crash. The bulls seem to close back up with serious buying pressure shown here via this candle, and then this was backed up by another green candle to the upside, signaling a close above what seemed to be like the top of the consolidation, coming out around 47.4. Unfortunately, there was an immediate retest. The following day, the BS seemed to drag the market back down, and then 2 days later there was a close below, albeit an unconvincing one. There was a close above it. First day, there was a close above it, albeit an unconvincing one, and then the second day the market closed below it, an unconvincing close as well. So as a result of this, we had a mini double top formed by the market on the daily time frame. If you drill down to the 4-hour time frame, you see something very similar. You see it, a more pronounced double top, albeit not a conventional one, but nevertheless enough to reach its downside target. So you can see we had a double top neckline coming at around 46.7k on the 4-hour chart, and this was validated during the first hours of today's trading day. The very first 4 hours of today's trading day completely validated that via a close below the neckline, and then we were looking at a target of around 44.5k, and we seem to have hit our target and even gone further down south to revisit our 42k territory again. So we are looking at currently looking at a low, daily low of 42.5k. So once again we are back to 42k, which seems to be the downside of this consolidation so far, and it's been working out perfectly. As you can see, there was an immediate reaction and bounce off from the market on getting to 42.5. The market failed to go below that level. That's immediate reaction, maybe not too convincing on the daily time frame. Nevertheless, it is an immediate reaction. The market has failed to go down below that point. We seem to be bottoming at that point so far, at least for today. So as a result, the consolidation is still intact as it stands now. I'll be drilling down to the intraday time frame so you can take a look as well. Here's how it's playing out on the 4-hour chart. We got to 42.5k and then a massive reaction as a result to the upside. The 4-hour time frame ended up closing as a pin bar, and then we've been followed by a doji of some sorts, signaling indecision and then maybe exhaustion from maybe the bears as it stands. So we're currently on the last 4-hour candle for today, and we seem to still be above 42.5. Was currently closing at 43.6k. I'll drill down to the 1-hour time frame so you can as well take a look. You can see there's been an immediate reaction from there, and then the market has been choppy on the 1-hour time frame, signaling, sharing the sentiment from the daily time frame and the 4-hour time frame of indecision. So the indecision of shown by the doji on the 4-hour time frame is equally shared by the 1-hour time frame, showing you resulting to choppiness there as well. So currently we are still consolidating. It is still very much intact, and the downside is still playing out perfectly, still at the 42.5k. You can see very well this like I said in the last broadcast, that 42k territory is a territory the market has loved so much. It's an area the market loves to visit or revisit times without number. It's a market, it's a region the market has been so much interested in prior to the market crash in May, during the market crash, post the market crash, and we're back to that territory again. This, I said it before, it's simply a rounded retest. The markets was built from that territory once again towards late July, when the bull run commenced, and we built on to 53k. There are about 53k when the market crashed again. So it took us a month to build from 42k territory to 53k, over a month, and then it took us a day to crash down back to 42k territory again. So when you look at the market from a markup and a markdown perspective, you're going to be making life very easy and less complicated for you than looking at it from a bull and bear perspective. The saying goes that it's easier to destroy than to build, and then this is simply a clear case of that. being easier to destroy than to rebuild or to build. It took us over a month to build from 42k to 53k, and then it took us just a day to crash down back to 42k again. So once again, this is just in technical analysis, this is what we refer to as a rounded retest. We broke above it. A break above it showed that yeah, we're out of we've broken out of the consolidation. So we've been trending up above that region ever since, and then we've come back to visit the region after over a month. That shows you that is a rounded retest back to that territory. So we are currently bottoming at that point, at that territory. After the May 19th crash, that seemed to be the top of the consolidation, with the downside being to around 30k territory. Now it seems to be like the bottom of the consolidation, with the upside around 47-48k. So until this is compromised on at least a daily closing basis and followed by a proper defense by bulls or bears, either to the up or downside, whichever is the case, that's when we can have a conversation. The 42k territory is compromised on at least a daily closing basis and defended well by the bears. We could be headed further down south. 40k is very not far away and very realistic if this is the case, if this seems to be the case, after which I'm looking at another target of around 35k if things go further down south, and after which I'm looking at around 33k, 32.7, 33k thereabout. So that is if this place is compromised. On the flip side, once the top region is compromised as well by the bulls, followed by proper retest and defense by them, then we should be looking at 53k or 53k, which is the swing high to beat for them to be able to get back their momentum. So as it stands now, they have an uphill task ahead of them, because where we are in the markets and what they need to beat, which is stands around 53k, relative to that position, it's an uphill task. But we know these are the same guys who've pulled down the market as the same guys who pulled the market up. They are the makers, so it is nothing new, it is nothing difficult for them. Just that building back up is usually more difficult and takes more time to do than crashing down, than destruction, like I said earlier before. So even if that is to be the case, they have more work and an uphill task to get back above 53k, which seems to be the target to beat for them to get back their momentum and resume their trend back up again. So far so good. The consolidation is still intact until this regions 42k and 48k to the upside are compromised on at least a daily closing basis. So summary of all my gibberish, I came to give you an update as to my last broadcast regarding the fact that yes, we seem to be headed towards another extended period of consolidation. As to how long that would be, I said it before, no one knows, only God Almighty knows that, and so far so good. I'm here to tell you that it's playing out perfectly. We're still in consolidation, and when that is going to be over, no one can tell. We're still consolidated between these two regions, so wait to see what happens next. This may likely be a bounce off from this region to the upside, and then the consolidation will continue. It's either a bounce or a break. It's 50-50. I fancy a bounce off, because I feel like we're still gonna bottom out this region, but like I said, it's 50-50, so I'll wait tomorrow's close to see what happens. So that's it from me today. All these numerous analysis are mainly for intraday and intraday traders and scalpers. So if you're a hodler and an investor, this shouldn't be anything to you. You should absolutely have nothing to do with what's happening currently on an intraday or intraday basis. You are in for the future, and crypto is the future. It's bullish on the long run, for the long term. So just keep hodling, keep stacking your hodling bags, loading them up, come back in X number of years time, and reap your harvest. So if you are a trader at this point, I think if you haven't shorted the market, you should wait, because we seem to be like at support, and it's a very dangerous affair to short or sell at support unless the market gives you a reason to buy a close below it, and a conversion into a neckline, same as a resistance. It's usually disaster. It's usually suicidal to want to long or buy at a key resistance unless the market gives you a direction via a conversion into a neckline. So that is it from me today. I hope you got value from this. If you did, please let me know in the comment section. Feel free to like, share, subscribe, whatever platform you're viewing this from, and remember that as usual, this is for educational purpose and not to be treated as financial advice. Trading crypto and all financial assets is a risky affair. Always endeavor to carry out your own research before entering any trade. To have a very lovely trading, scalping week ahead, or waiting week ahead. If you are a hodler, take advantage of these dips to accumulate your bags, and chill. Or else, if you are a trader, consolidatory market are dangerous market to play in. Even experts get wrecked here. So I wait till the market gives you a clear direction if you are not sure of yourself before getting into this. Thank you very much. Wish you a lovely week ahead. Bye bye. God bless you.